My guest at this time is Vance Ginn. He is the chief economist at the Texas Public Policy Foundation. He joins me now to discuss excellent manufacturing numbers in the month of December, what it means for the health of our economy, and whether we can keep it going. And Vance, thanks so much for being with us.
Thank you, Greg. It's a pleasure to be with you.
Well, I'll quote from Reuters here. U.S. manufacturing output increased by the most in 10 months in December, boosted by a surge in the production of motor vehicles and a range of other goods, which could allay fears of a sharp slowdown in factory activity. The projection was a manufacturing rise of 0.3%, turned out to be 1.1%. So how healthy is our manufacturing sector right now?
You know, the manufacturing sector has really just blossomed over the last year. I mean, you think about the number of manufacturing jobs that once thought were going to continue to be in decline because of the innovation, the productivity increases in manufacturing for, a number of years, maybe have replaced some of those jobs. But what you've seen is that, that the cost to these manufacturing companies were often too high. So what happened was the Trump tax cuts lowered the corporate income tax rate from 35%, the highest in the developed world, down to 21%, and makes us more competitive, along with some of the other sort of immediate expensing of depreciation. And those sort of things allow for a lowering of cost of these manufacturing companies. And what do? They start putting more money back in investing into their business through the form of hiring workers, but also expanding as the economy continues to expand, as more money is in people's pockets.
Vance, you hear a lot of different reactions to the growth of the manufacturing sector. Those who are skeptical of the Trump economic approach say, look, he's trying to force us back into an era when manufacturing took on a more prominent role, and that's just not where the economy is right now with the technological advancements that we've seen. And then you've got others like Steve Moore, one of the Trump economic advisors, and certainly on the right, saying these aren't exactly your old manufacturing jobs. They're doing manufacturing, but it's in these 21st century type technologies a lot of the time. So what is the reality in terms of what manufacturing is happening?
I would argue that it's a little bit of both. That we have moved away from the manufacturing some over time as we move towards a service sector economy. And there are a number of reasons for that when you look at the economics and slice and dice it up. But I think there's something right with what Steve Moore's saying, too, is that, look, we are in the 21st century now. There are different ways to doing manufacturing compared to our fathers and our grandfathers' era. And so whenever you think about it, what's going on now is that we're doing things more efficiently. And I think one thing, like I was mentioning a minute ago, is I really think the cost to become so high, whether it be from unions up in the north and Michigan and places like that. A lot of those manufacturing companies are now moving to places like Texas with no personal income tax. I think fiscal policy matters. One thing you look at over time is institutions matter. And the institutional framework that you have for your economy, if it has too high taxes, too many regulations, too many union sort of rules and regulations associated with it, that's going to force people out. And it's going to make a slower economy and slower manufacturing sector. You get rid of those, and we see what can happen is that there are, manufacturing's coming back. Whether or not it should or not is a question for the markets to discuss and not top-down approach.
Talk a little more, because that's really interesting about how the jobs are coming back, but they're not coming back to where they were before because of costs imposed by organized labor and government regulations and so forth. You talked about them moving from Michigan to Texas. How common is that? What states are booming and what states are struggling, even though the jobs are coming back?
Yeah, no, it's really quite fascinating what we've seen, whether it be from places like Detroit or other places in the north that used to have these manufacturing hubs where, a lot of things were being created, especially automobiles, right? A lot of the auto manufacturing. But now they are moving down to places like Texas. Toyota just opened a plant not too long ago in Plano. They have one down near San Antonio as well, where they build the Tundra truck. And also Tennessee, another place that has no personal income tax. These are places where and they also are a right-to-work state, like in Texas and Tennessee, unlike those places up in the north. And we're starting to see some changes, though, up in the north, whether it be Wisconsin and their right-to-work laws that were passed recently. Maybe that will start to incentivize, invigorate the manufacturing sector up there again, because they know they need to compete. They can't just let all their workers and their manufacturing and their entrepreneurs move somewhere else. If they do, then their states and their cities will continue to be in decline, and that's bad for everyone. We really want people to be prosperous across the nation, not just in one state or another, but it does allow us to see what the competition, the laboratories of democracy that we have in the system of federalism can allow and really bring about more prosperity.
We're talking with Vance Ginn. He's the chief economist at the Texas Public Policy Foundation. And Vance, this same report, which talks about how good things were going in the manufacturing sector in December, also has some clouds in the forecast here. It says manufacturing activity, which accounts for about 12% of the economy, is slowing as some of the boost to capital spending from last year's $1.5 trillion tax cut package fades. In addition, a strong dollar and cooling growth in Europe and China is hurting exports. Lower oil prices are also slowing purchases of equipment for oil and gas well drilling. So is this strong performance in the manufacturing sector going to keep rolling, or is it going to peter out here pretty soon?
You know, I'm always an optimist about the American economy because I believe strongly in the entrepreneurial attitude that we have here. And whenever you allow for them to have the freedom to act, they will. But there are headwinds, of course, whenever you think about higher interest rates. I mean, look, we just came off a long period of time where interest rates were essentially 0% at the target Fed funds rate level. And so they had nowhere to go but up. And we've seen them go up quite precipitously higher over a short period of time. And so what that will do is send some market corrections. We've seen that in the stock market. You know, I think you're going to see that in the economy, some slowing here and there. Because what it really means when they raise interest rates, just real quick technically, is you have a net present value of these longer-term investments, and that reduces that net present value. In other words, it just makes it costly to invest over time. And so some manufacturing companies, that will hit them harder than others, and they'll slow down their amount of investment. Doesn't mean that it will stop, but it could slow overall. And we've seen a robust period of economic growth. In 2018 could be the first year that we've had above 3% growth in more than a decade. And the unemployment rate's at 3.9% at the end of the year. I mean, we've seen some record low unemployment rates. So there's a tightening labor market across the economy, and we started to see wages rise as well of about over 3%. So that's also a good sign in the labor market. So what I'm looking at in the manufacturing sector is like, okay, sure, you know, even the trade issues, tariffs and things of that nature has also, I think, stunted a little bit of the growth that we've had, and higher interest rates being another one. But look, overall, I think I'm still optimistic. There's still a lot of good positive forces that could keep this tide going.
Fascinating. We'll be watching to be sure. The economy has certainly been one of the bright spots lately. A lot of folks worried with the market corrections, as you mentioned, but we'll see where it heads from here. Vance, always good to talk to you. Thanks for your time today.
Thank you, Greg. Have a great day.
You too, sir. Vance Ginn is the chief economist at the Texas Public Policy Foundation. I'm Greg Columbus reporting for Radio America.